Most funded traders are using a strategy that is never going to work with a funded account. You could be consistently profitable on your personal account. You could be passing prop firm challenges, maybe getting payouts occasionally, but there is a ceiling to how far your strategy can scale. In this video, I'm going to be covering different types of trading strategies and why they'll never work with prop firms. And at the end of the video, I'll show you what type of strategy you need to be trading to be able to beat them. The longer I traded with prop firms, the more I realized that my strategy was just not designed to work on a funded account. And after 5 years of trading the same way, I switched to a different strategy, and in hindsight now I can see that I was doing it on hard mode the entire time. For those of you who don't know me, my name's Griff. I've been a funded trader since 2022. And I've received over $100,000 of payouts in that time. So the first strategy type that's not going to work on prop firms is scalping. Scalping, it's quick dopamine, lots of little wins, it feels really good, but on a prop firm account, it's just not going to work. Scalping strategies are lots of small wins, high win rate, and on a prop firm account where spreads, commissions are just way bigger than on a personal account, you're just going to be eaten alive. On a personal account, maybe you can get 2% per month. On a prop firm account, that'll probably be closer to 0% per month. Prop firms have wider spreads than normal brokerages, so that strategy you backtested is just not going to work on a live prop firm account, unfortunately. Second type of strategy that's not going to work, or it's going to be really hard to get to work, is lower time frame trading. So the main issue with trading on low time frames is slippage. You need volatility to see those big price movements, but by introducing that volatility, you're also exposing yourself to slippage. If you're trading with a large stop loss on the lower time frame, you should be okay. But if you're trading with a really tight stop loss, then you're going to be killed by slippage, basically. For example, a 5 pip stop loss on 1 minute time frame is going to perform completely different between backtesting, live trading on like a normal broker, and then trading with a prop firm, each getting progressively worse and worse results. I've seen people be slipped 3 to 5% on the 1 hour time frame, trading with 15 to 20 pip stops. So if you can imagine what that kind of slippage would look like on a 5 pip stop loss, you could be losing like more than 5%. That's just not worth the risk on a prop firm challenge where you've got 10% max drawdown. And this is especially true when you're trading around news events, which leads me into my next point. By the way, if you're finding this video useful, I upload videos like this every 2 weeks, so make sure to subscribe. Yeah, I'm talking to you. Make sure you subscribe. So, news trading. Apparently that's a pretty popular prop firm strategy, particularly for gaming prop firms. It's very much black or red, if you know what I mean. It's quite gambly, and a lot of prop firms have started banning news trading strategies for this exact reason. So even if your prop firm allows news trading, they still often have the right to just void any trades that make a significant profit around a news event. But of course, they're not going to void any significant losing trades around a news event, are they? There's no slippage in backtesting, so obviously it works great. But on a prop firm account, it's just not going to work. So you might be able to get some quick payouts, you might be able to get to $1 million in funding really quick, but it's completely unsustainable, and in a couple years you'll be exactly back where you started. So I just would not go down that route at all if I were you. High frequency strategies. I don't know who thinks this is going to work on a prop firm challenge, but just don't do that. Don't do high frequency trading on a prop firm account. If you've ever gone onto your broker and had a look in the stats, you can see how much you've paid in commissions, and it's nuts. So if you're doing high frequency trading, oh my God, the commissions, the fees, they're just gonna be absolutely insane. So don't do that. Don't do that on a prop firm account. I do not recommend it. It's not going to work at scale. Prop firms already don't like people trading high frequency strategies. Imagine you're doing 10,000 trade modifies in a day. Well, that's costing the prop firm a lot of server fees to host that account for you. So they're already going to have beef with you before you have even requested a payout. So the fifth point is high risk reward strategies. And this is something that I've had to learn personally. My previous trading strategy is 30 to 40% win rate in the live markets, and it has a 5R average risk reward. And sure, this is great. I'd get payouts, but the payouts were very large, and prop firms would scrutinize over my account, try and find reasons to not pay me, essentially. So although it works, it's so much better if you have a different type of trading strategy, which we'll discuss at the end of the video. I nearly revealed it early there. Prop firms are a business, you know, and if they are paying out these massive, infrequent, like one-off payouts too regularly, they're going to go bust, unfortunately. We've seen it before. Loads of prop firms have gone bust. Also, with these infrequent large payouts, you're going to have long periods of drawdown and flat equity curve, which I've experienced in trading in 2025, where I've not had any payout. First time I've had payouts every other year. 2025, no payout at all, unfortunately, because I've just had a flat equity curve throughout the whole year. And this puts a lot of pressure on you psychologically, especially when you're managing over $1 million in funding like I am. In a moment, I'm gonna reveal the strategy type that is optimized for prop firms and will work at scale. Like I said, I've learned the hard way that this is the type of strategy that you have to be trading to be having the most success with prop firms. So before we look at this last point, I just want to let you know that this video is sponsored by the Fivers. Super reliable prop firm. I'm sure you've all heard of them. They've been around for a very, very long time, 10 years actually. I've received nearly $10,000 in payouts from them. I'll leave a link in the description down below. So what type of strategy actually works? Well, if you think about the 5 strategies that I've just covered, what is the opposite of all of those? Well, it's low risk reward, it's high win rate, and it's higher time frame. So why do you need a strategy with these characteristics to succeed trading prop firms at scale? Higher time frame often means fewer trades. Fewer trades means fewer opportunities to breach your max drawdown. You need to be very selective when you're trading on the higher time frame, something which you do not need to be so selective when scalping or doing high frequency trading. Also, trading higher time frame means that slippage and spread is going to have a very minimal impact on your trading results overall. Higher win rate means that your equity curve is nice and smooth and consistent. It means that you're getting lots of little payouts, which prop firms aren't really going to argue with. They are going to argue with one massive payout out of the blue. Personally, I found that mean reversion works really well for a type of strategy like this, because the market's ranging 70% of the time. I was previously trading a trend trading strategy, which meant I wasn't getting very many trades, and when I was having a trade, it was massive winning trade. You know what I mean? So now I'm trading a mean reversion type strategy, or at least that's what I'm focusing on. It means that I'm getting lots of little winning trades, which is much nicer for prop firms, and I'm much more likely to get paid out. And this is exactly what I've been working on over the last 8 to 12 months. I've got my trading company, Moniver, and within this, we've just been working on mean reversion, me and my business partner. If you're interested in how I'm trading this new trading strategy, I'll leave a link somewhere to me backtesting this mean reversion strategy if you're interested. So thank you for making it to the end of this video. Remember, I upload every 2 weeks. If you're not subscribed, please subscribe down below. Leave a like, leave a comment, and yeah, I'll see you in 2 weeks. Thank you.